Hello, I'm Nicholas Hyatt, Investment Manager here at Wealth Club, and today I'm discussing the outlook for 2024 with Charlie Huggins, the manager of our Quality Shares portfolio. We'll be discussing his views on what the future might hold for the economy, interest rates and companies, as well as some key investment themes for the year ahead. Charlie, perhaps we could start with a review of 2023. What's really caught your eye?
Well, I think if you wind the clock back to the start of 2023, we had very high inflation, we had interest rates rising rapidly, and I think if you asked most people what they thought might happen to the economy in 2023, they would have given you a fairly grim prognosis. As it transpired, inflation has been high, interest rates have risen rapidly, but the global economy has probably held up a lot better than many people would have expected, and global stock markets have recovered and performed reasonably well in 2023. So what's the main thing to take away from that? It's probably that we shouldn't try and predict what's going to happen to the economy or the stock market, and we shouldn't try and time markets, if that's one thing that 2023 probably teaches us.
So it feels like there's still quite a bit of uncertainty out there, albeit maybe with a bit more optimism around interest rates coming down. How do you read things at the moment?
Well, in many ways, it's sort of the opposite scenario to what we had at the start of last year. So inflation is moderating. People are expecting interest rates to be cut in 2024. And there's a little bit more optimism around the economy. People thinking that we'll get a soft economic landing, we'll avoid a big recession, so the economy will weaken, but we'll avoid a big recession. It's sort of what I describe as a Goldilocks scenario, and it is one possibility, but it isn't the only possibility.
So what if Goldilocks' economic porridge isn't just right? What are the other possibilities?
I mean, pretty much every scenario is on the table, isn't it? Like most years, but one potential scenario is inflation stays higher than expected. Inflation is always subject to things like commodity prices, which are very unpredictable. Wages are still going up quite strongly, so I don't think we can say that inflation is no longer going to be a problem. If inflation does remain high, that will potentially mean that interest rates are higher for longer than expected. And a second scenario, maybe more likely, would be that the economy weakens a lot more than expected, because what you tend to find with interest rates changes is it takes time for them to filter through to the economy. It takes time to filter through to higher borrowing costs for consumers and corporate borrowers. So it's possible that the economy is weaker than expected in 2024, but we'll just have to see.
And are there any particular themes you think in either markets, companies, or the economy generally that will be important next year?
Well, I think one of the biggest themes of 2023, which I would see continuing into 2024, is around artificial intelligence. So since the launch of ChatGPT, we've seen a rush from businesses to launch AI solutions, and there's been an enormous amount of interest in AI. And it's caught many investors by surprise, including me, in terms of how quickly this trend has been embraced by businesses and consumers alike. So I see that continuing into 2024.
I'm a bit surprised you've mentioned AI, to be honest, because I would say that you generally don't go for hot trends, but you think AI is here to stay. It's not just hype.
You're certainly right. I don't jump on themes and trends, and often they are overhyped. And I'm sure parts of artificial intelligence will end up being overhyped. But overall, if I look at what AI technology can do, I think it has potential to be quite transformative. And it doesn't feel like a here today, gone tomorrow type trend. I think this is here to stay. AI potentially could be used to improve a lot of processes that are very manual at the moment and very inefficient and quite costly. If you look in the medical setting, for example, say interpreting scans, that's something currently that's done by human beings, and it's quite inefficient and it's quite error prone. It's not a large jump to say that that could be done with AI technology. The same applies throughout the medical setting, actually, and also in many other industries, whether it be IT coding that could be done with AI, or online publishing or whatever it is. So I think AI is here to stay. I think it's going to create winners and losers. It could cause quite a lot of disruption for some existing businesses, and it could create a lot of opportunity for others.
So where do you think we're most likely to see the AI winners coming from?
I think probably amongst the existing incumbents, actually, with the data sets, with the resources, with the customer relationships. It's all very well having AI technology, but without the data to deploy AI models against, without the customers to sell AI solutions into, it's not much good. People tend to focus too much on the technology itself and not enough on other aspects. So you look at a business like Microsoft, for example, which I own in Quality Shares portfolio. It has all of those things. It has great AI technology, but it also has data. It also has fabulous customer relationships. It can throw billions at the problem. So to my mind, that looks as well positioned as any to benefit from AI. Another business in the Quality Shares portfolio is RELX, which is a data analytics company selling to lawyers and to insurers to help them price risks. Again, it has industry-leading data sets and it has very strong customer relationships in order to monetize the AI opportunity.
Are there any other themes that you'd highlight going into next year?
Well, I think although people think or expect interest rates will come down in 2024, I think they will still remain a lot higher than we've been used to over the last decade. I don't think interest rates are going down to zero anytime soon. So for me, balance sheet risk is still a big theme heading into 2024. There could be an element of complacency from some investors thinking that rates will be cut, but I don't think now is the time to be taking balance sheet risk. So again, that's probably a continuation of a theme from 2023. And another continuation of a theme is more acquisition opportunities. We've seen a lot of companies already in the Quality Shares portfolio benefit from more acquisition opportunities because the cost of financing is higher in a higher interest rate world. It's harder to get financing. So again, I expect that will be an ongoing theme in 2024, more acquisition opportunities.
So the Quality Shares portfolio launched in March 2023, which means we're about 9 months into it so far. How do you feel performance has been to date?
Well, overall, I've been very pleased with the business performances of the companies in the portfolio in what has been quite a tricky economic environment over the last 9 to 12 months. But most of the companies in the portfolio are growing revenues, profits and cash nicely. They've coped well with the inflationary environment. So I look at companies like Microsoft and RELX and Roper and Diploma. They've all made really strong progress. Diploma recently reported a 24% increase in its full year operating profit due to a combination of organic growth and acquisitions. So that is one of the companies that has benefited from the acquisition opportunities. So overall, very pleased. Clearly, not every company has performed as I would expect. There have been one or two disappointments. The disappointments tend to be a similar theme, which is destocking. So we saw during the pandemic a lot of companies stock up on inventories, and now supply chain challenges have eased and they've started to reduce those inventories. So that has been a theme that has negatively impacted companies like Croda and Danaher in 2023.
And do you think that trend is over? So we're not going to see continued destocking in 2024, or is it something that could continue?
I don't know whether it's over as such, but I think we're probably nearer the end of this destocking cycle than the beginning. It's been going on now for, depending on the industry or company, but at least 6 months, going on 12 months of destocking. So I think probably at some point in 2024, maybe into the second half of 2024, companies' inventory positions will have normalised. You know, a company cannot keep reducing inventories because otherwise they'd have nothing left to sell. So at some point, I expect it will come to an end, and demand for a company's products will be driven much more by end consumer demand dynamics rather than companies adjusting their inventory positions.
So pulling everything together, what is the key impressions you'd like to leave investors with heading into 2024?
Well, I think that the start of a new year is always a great time to review a portfolio. It's a great time to say, am I diversified enough? Can I sleep well at night with this portfolio? Is it well positioned to perform in a variety of different environments? I think one of the big mistakes that investors often make is they go for prediction rather than preparation. But any portfolio that relies on having Derren Brown or Mystic Meg at the helm.
So leave them to predicting the lottery numbers rather than your portfolio.
Yeah, I don't think you should be positioning a portfolio for a single or one outcome. It's far better to be prepared for a range of scenarios. So that's a big message I'd leave investors. More specifically, we've spoken about inflation and interest rates. I think inflation will remain a problem, maybe not as bad as it has been, but it will probably remain a problem, and interest rates will remain higher than we've been used to. So I think look for companies with pricing power and look for companies with strong, very strong balance sheets. And then finally, I'd probably leave the message that 2024 actually doesn't matter all that much for the Quality Shares portfolio. So when I'm selecting businesses, I'm looking for those companies that can grow their profit and cash over a 5 to 10 year period, not the next 5 to 10 months. So try and find those businesses that will still be thriving in 10 years' time. Look past economic headlines and focus on long-term business prospects. Because if you can find those great businesses that will still be thriving 10 years from now, and if you can hold on to them and be patient, and if you can ride out the ups and the downs, then you stand to be rewarded, and that's the approach that I'll be taking in 2024.
Charlie Huggins, manager of the Wealth Club Quality Shares portfolio, thank you very much.
Thank you.